You guys hear me? Good morning, everyone, and happy Wednesday. Gonna get started here in just a second. If you guys can hear me, just if you don't mind, quickly giving me a yes in the chat box. All right, perfect. All right. We're going to get started in just a minute. Okay. All right. Let's get started. Good morning, everybody, and happy Wednesday, April 2nd. Serge Berger here from thestudytrader.com. We are here on an important day from a news perspective. What I'd like to do today is I'd like to give you a bit of an update as far as the sort of what's going on in the broader market and for our straddle idea. And then I also want to make sure you have a bit of an idea of sort of the broader idea in terms of what's actually happening underneath the surface. And then we're going to go live again later on today, presumably. So let me start off with this quickly first. So we're going to go live later on today. And there's two things that you need to do if you want to join that. And I would encourage you to join. So what we did on Monday is, if you guys were here on Monday, we did a live session, like our Set the Market, and I talked about a straddle. And I'm going to go further through that straddle idea here and just kind of give you an update on it in just a few minutes. But what we're going to do later on today, and I don't know what time, that's why you have to sign up here. We're going to go live, but it's when it happens, we can't create a YouTube live as quickly as we can a GoToWebinar. So if you want to be alerted for when we go live later, and I don't know when it is. Right now they're saying 4 o'clock. They're going to announce this Eastern time. I'm going to assume they're going to be a bit late. That's typically how it's been happening. They're going to be, maybe half an hour late. I don't know. Maybe they're right on the dot. I don't know, but I'm just warning you. And then maybe this whole news is going to take a half an hour. I don't know. But as we start getting through that press conference, we're going to create the webinar session to do a live analysis of it. Okay. So if you want to join that, use this link here, thestudytrader.com/Trump. And again, all it is we're going to go, is all you have to do is basically register there so that you can join us live later on today. So that's number one. Now, I realize most of you guys aren't going to be watching your email second by second. So if you want to get a text message alert, then also use this link. You actually have to use both if you want a text message. You have to register for both. It's just this allows us to send you a text message, because text messaging these days is becoming very regulated as it should. And so we need to make sure that if you want to receive a text alert when we go live, because it's going to go quick, like we're going to have to decide pretty much in real time when we want to go live. So, and what we're going to do is we're going to live analyze this whole thing, because so maybe some perspective. First of all, it's not by accident that they're going to wait until after 4 o'clock to announce this news. At least that's what they're telling us. Maybe they do it way earlier. I don't know. I'm not inside the White House's head either. But presumably after the close, that's what they're telling us right now. And it's because the U.S. markets are going to be closed. European markets are closed, and Asian markets aren't yet open, right? So it's a great window to announce something without having to completely shock the market. Depending on what it is. So that's why. So we're going to do a live analysis. Now, to take us a step back, we mentioned this yesterday in our TradeOps chat room. If you're not a TradeOps chat room member, go ahead and do that like now. It's an amazing place, steadytradersecrets.com/ops. What we do in there, we do this all live throughout the day, right? And more. And so what you're going to see here as we start going through our trade again is kind of where we're at. So what we talked about on Monday is the idea of putting on what's called a straddle in the SPY ETF. And the reason we settled on a straddle, and again, we've now done 2 or 3 live sessions on this since Friday. We actually first did it Friday here live. So if you're not getting that alert, please subscribe to the channel as well, because we actually went live on this last Friday. So if you're not subscribed to the channel, that's the first thing you got to do. And like the video if you don't mind, please. That will allow us to continue doing a morning show. But the reason we put on a straddle, and it was, I think we did end up doing a 550 straddle. Let me quickly see what ended up happening. And I'll explain what that is in case you are just here for the first time. Yeah, 550 straddle, at the money straddle is what it ended up being when the market opened on Monday. So, and again, we went through after the set the market session on Monday. We then went into our trade ops channels where we did this in real time. So far, just so you know, so far this trade is actually already up 10%, maybe a bit less this morning because futures are down again. So maybe 5%-ish. So if anyone has cold feet here, and remember, none of this is recommendations. We don't do investment advice. This is purely educational. But if one is getting, concerned here, and put this trade on Monday morning when we alerted, or actually we alerted everyone on Friday to be fair, then one could already take some profits here. Okay, so I just want to make sure that everyone kind of understands what's going on here. So what we are expecting is that this is this is not like a one-time deal and it's done. I personally don't think this tariff announcement is a market clearing event. It could be, but I don't think the odds are there for that. Now, is it possible that the markets rally 2-3% if the news comes in one way or another? Of course it is. But we then still only know half the story. We don't know how the world pushes back on this stuff. I mean, presumably they haven't done a deal with the whole world yet, but they may have. Right? Like that's actually possible that they have. We'll find out. If they didn't, then it's gonna take even longer. So the point is, this is just one trade. And what I still see in our community, and certainly on the internet, and the internet is just invasively bad, but even in our community where it's like become a passion of mine for the past 10 years to make sure people don't gamble and put on high probability trades, I still see people taking absolute gambles. Even in our community, people are more prone to let's say buy a call or a put or be long or short, like a levered ETF or whatever, than doing a straddle here, because they just have that gambling. They just think they know something that no one else knows. Sometimes it's politically inspired. Sometimes it's just I don't even know what it is. But they're putting on a lot of low probability trades. Now, low probability trades you can put on a gambling trade when the market just rips higher, like we did for the past 10 years, which is unprecedented, by the way, with having 7 stocks lead the market for that like 12 years. Like it'll probably never happen again. That's an easy environment to do that, but that's not normal. So what we're doing here is we're looking at a trade that could make money in either direction, but the market has to move enough, right? So far, the S&P, since Friday, since we first talked about this, and then since Monday, when we made an even bigger deal about it because we noticed that people weren't paying attention as much, the S&P is actually up quite a bit off of Monday's lows. As again, this morning it's going to open down. So it really hasn't done much, but the trade is about, again, depending on one's exact entry, up 5 or 10%, right? So that's kind of where we're at. Now, I just want to say this one more time, and I see some of the stuff in here too. If you are politically triggered, you have got to get that out of your head. Okay? This is not about taking political sides. This is about making money in the market, right? If you want to go do politics, I'm sure there's a Twitter feed somewhere or a YouTube channel where someone talks about that and lets that stuff get in your head about making money. Politics are, for the most part, going to keep people from making money. What we're doing here is being open-minded, completely apolitical. It doesn't matter one bit what happens. We're trying to be making money in the market. That's all we're trying to do here. It's not about Trump. It's not about this side of the aisle or other side. It's really not. It's about making money in the market. And so if you are politically triggered by everything that happens and letting that infiltrate your trading, you're gonna lose your ass over time. Okay, I just want to be very clear on that. So if you're coming here just to spew some political biases, like that's great, but don't do it here because that's not the point of it. We're trying to make money. That's all we're trying to do, right? That's not to say that politics don't serve a purpose. Of course they do, but for making money, you're not going to do well if you keep doing that, right? I know right now we live in a very polarized world, but from a market's perspective, it's a horrible thing to do because it just keeps us from making money. You have to be quick to change your mind, and political biases typically aren't changed quick to change. So that's that. So that's why we put the straddle on. If anyone has any more questions on the straddle idea, again, remember this is just educational, I'm not giving advice here. Please let us know. We're going to go live later on today to go through this. Now, before we continue on this, let me show you a couple of things that are happening that I think are worth paying attention to. First of all, we are seeing markets, particularly the tech-heavy parts of the market, break trends. We've been talking about this now for a while, particularly in the trade ops channels where we do this in real time. It's been making it very clear for people. So that's nothing new, and the trends are changing. So that's why the market rover, that which is our kind of core staple a guide tool to use, has been telling us now for some time that these trends are changing and they're ending, and that's not like something that's going to repair itself in a week or two, right? Like those are longer standing trends that are changing. So to give you an idea of what that looks like, that doesn't mean we can't have a rally here. Again, it's a time frame question. So this is the NASDAQ 100 an hour market rover, right? If you can't comprehend this, please keep coming back to these sessions just to learn that. So you can see when the NASDAQ 100 went from a bearish trend, that's a red background color, into a neutral trend in February 23, it then finally went into a bullish trend in April 2023. It then rallied as much as 71%, and finally in early March, so about 3 weeks ago, it went into a neutral territory. These neutral territories typically don't repair themselves immediately. It typically takes months and quarters for that to repair itself, and quite frankly, it could go bearish trend, meaning the red background color. So we're in a very different environment than what your favorite CNBC guest that only sees bullish markets will lead you to believe, or your neighbor who only likes to buy Nvidia on 5% dips, who has been dead wrong now for almost 12 months, by the way, right? We're doing probabilistic trades here. We're looking at the market from a neutral perspective, meaning we are open-minded as to what the outcome could be, bullish or bearish or whatever, right? So that's where we are. Now, what's happening further beyond that is that the credit markets are starting to weaken. Now, this is something I realize that the retail community doesn't really get to hear because it's not something that is very clickbaity. But this is what you're looking at here, and just take this for what it's worth, right? I cut my teeth at JP Morgan as a credit default swap and that kind of stuff, analyst and trader. And so what we're looking at here is something called it's the loans market. So like loan, you guys all know what a loan is, right? You can compare it to high yield bonds basically, but these are secured. And what this is, it's just an easiest way to show you this is the an ETF. You guys can all write this down. The ETF is BKLN. BKLN. And what the ETF does is basically track a basket of high yield loans, or a senior high yield loans, basically is what it is. And you can see that back in 2014, the credit quality of these loans began to deteriorate for the first time since the creation of that ETF. And then we continued to get into these phases where it would consolidate, and then the credit quality would deteriorate and it would go lower. And this is typically what leads to recessions, by the way, too. Okay? So you can see, for example, we had COVID was extreme, right? But still credit quality deteriorated. It deteriorated in 2022. and I think it's about to go lower, maybe a lot. I don't know how much, so don't ask me about that because I just don't know. But I think we're getting, even if all you want to do is take a chart and draw lines, which is what I'm doing here for you, you can hopefully see that this is something that may tell us that we're going to go into a rockier period in the economy. And so I'm trying to give you heads up because you're not going to get this in most other parts. Certainly your best your best YOLO newsletter that's sending you stuff every day is not going to talk about this because I know what this is. But a lot of conversations up in New York over the past week or so. And this is something that kind of comes from that. So if you guys have any questions on this, please let me know. But this is something that I've watched very closely. Again, the ETF is BKLN, and this is not just being like a dip in the market. This might mean we could go into a recession, right? Could again, open-minded, because again we don't know exactly what the path here is, and it's just all a bit uncertain right now. So that's sort of I guess a lesson on the credit markets. If you really want to get boring, and I realize you guys don't care about this much, but I'm going to quickly just show it to you anyway in hopes that someone cares. What you look at here when you look at the yield curve is you're seeing the yield curve is actually re-steepening. Let me quickly share this with you so you can see what that looks like. So you can see the US yield curve, which is basically the difference between yield spreads of the 10-year yield and 2-year yield. It's not like blowing out, but it's starting to, it's still on the steepening. And so basically what that means is the short end of the yield curve is starting to come down, yet the long end of the yield curve is kind of holding up. And basically what it is, it's stagflation. So if you look at yesterday's economic data, I don't know how many of you guys looked at yesterday's economic data, but we had the PMI, Purchasing Manufacturing Index, which is a basic inflation gauge, was actually up. Okay, so inflation was up, but growth through the ISM manufacturing was actually down. That is what's called stagflation. And we're getting a lot more of this. So that to me would speak all the more for seeing the credit market deteriorate. It doesn't have to fall. It doesn't have to be like a GFC, like a great financial crisis like we had in 2008, 2009. But it can be something that is not going to feel good, right? Particularly considering that everyone is still long Mag 7 for the majority of their portfolios. And if you are, quite frankly, at this point, shame on you. We've been talking about it for 6 months, that 9 months now, or actually probably a year, that trade is crazy crowded. And so, please heed those calls. If you need advice on that stuff, you can go to bluemarlinadvisor.com and we'll happily look at your portfolio, because it's about the last absolute chance right now, I think, for people to change their portfolios. I'm not sure people have a lot more time to change their retirement portfolios, like the IRAs and just their portfolios. So go to bluemarlinadvisor.com and have a look at that. But more importantly, for right here, right now, we're waiting on the news. So please make sure you join us later on today. So again, go to this link. This is all free. It doesn't cost you a penny. Go to thesteadytrader.com/Trump. And that's not because we're political. It's just because it's clearly coming from the White House. So don't get triggered by the word Trump. It's just what it is. And so we're going to go live as soon as we know what the news is. I'm assuming today it's going to be closer to maybe 5 o'clock Eastern time. I don't know, but that's what's currently being advertised, because they're going to come out of this at 4, maybe half an hour later. And then after that, maybe it takes half an hour. I don't know, but we're going to be quick. We have to be pretty nimble today. The market will be closed, but we'll be live today, later on today. You'll be alerted, and you need to sign up for the text message alert probably, so that you get alerted in real time, because it's going to be quick. Like, we're going to make a call and we'll be live within like 5 or 10 minutes, right? And we can't create a YouTube live that quickly, so we need to do it in a webinar. So if you want the text alert as well, just go to thesteadytrader.com/SMS. And this is it's possible that we get some news during the day, right? So if you're in the trade ops channels, you're going to get all this sent to you in real time through the Slack app, right? Through pop-ups. So for that, you need to make sure you get into the trade ops chat room. I'm going to quickly just put this link there so you can join us there, and then going forward as well. But the next time we'll be live will be later on today, Again, I'm thinking it'll be maybe 5 o'clock Eastern time. That's kind of what I'm guessing. If something happens before then obviously the people in the trade ops channels are going to be alerted to that first. So that's that. Are there any questions, or are you guys all just stunned and like not sure what to do and politically triggered or not politically triggered? Like what are you guys thinking right now? I'd love to get some feedback. You know, we've been kind of spilling out our guts here since Friday, making sure people are in the right mindset. I see it's helping. It's not helping as much as I would like it to, because I think a lot of people are still just kind of, you know, long Mac 7 and are not even sure like what's going on anymore because they're not making money. So I'd love some feedback. Any questions, let us know. I'm here. I'm happy to stick around a bit longer today if there's anything I can help you with. But the straddle, just quickly going back to that, again, we put it on. I mean, again, we were live here Friday. People didn't seem to care, so we did it again. I sent out a video and I've mentioned it in the Trade Ops chat room, and then we went live on Monday just to make sure everyone actually is listening to this. So that's that. But the straddle so far is making money, and so yeah. Yeah, sure. I mean, again, you guys can go watch the recording of it's all on the website here on the channel. Basically, what it is it's just we bought and again, this is not a trade to get in today. I'm just going to be very clear. Okay. The reason we went live on Friday, we mentioned it in the Trade Ops chat room on Friday, and we even went live for all of you guys here on Monday for free, is because that was the time to get in. I don't think now is the time to get in. Okay? So essentially what it is what we did is we bought an at the money call and an at the money put. I think it was at the time it was a 550 strike, because that was the at the money basically Monday morning. And so what that means is if the market moves enough, it had to move about 15 points, then we could make money, right? If the S&P does not move at all, it's not like we're going to lose our ass, right? So this is something, again, we live in such a gambling world right now that I saw even this morning, I saw some commentary. People were scared to take this trade, but they were more willing to take a directional gambling bet. It tells me that everyone's still gambling, folks. You guys are still gambling. A lot of you guys are, right? And I don't mean this mean. I'm trying to help you out, because we come out of a 15-year gambling bubble, like a massive gambling bubble. You got to start thinking in probabilities and changing your damn portfolios as well, right? This is not advice. Obviously, can't give you legal advice. I can only do that, Blue Marlin. But to lens of education, think about that. So what we did here, James Henderson's asking, would you explain the straddle? All we did is we bought an at the money call and at the money put. Now, I typically don't like to do that kind of trade, because usually the options market is already overpricing that trade. And it's entirely possible it was already overpriced, but I do think that given the average true range that the stock had been in, and that the fact this is pretty big news that the market could move more, then the options market was pricing in on Friday and on Monday. Okay, so that's all it is. If the market doesn't move, the trade's going to lose some money. It's not going to go to zero. That's why we're using options expiring 2 or 3 weeks out at this point. We're not using weekly options. Those are gambling options for that kind of purpose, right? There's no reason being long weekly options on something like that, because you're going to lose way too much money with theta and IV collapse. So that's what the trade was, James. And again, you guys can all go watch the recording. Now, what we're going to do at hopefully 5 o'clock today, or I don't know. That's why you guys have to sign up for the thing here, because we go quick. We have to go live quick to analyze this. For those of you guys that are following us in this trade, or you've just follow us along, because I'm going to have a lot of phone calls with hedge funds and other people as soon as the news hits, and then I'll go live with you guys. Okay, so I'll have a lot of insight and analysis and stuff. But in terms of the straddle, I don't think this will be something we want to get out until Thursday. So for me personally, I bought the straddle on Friday, and then I added a bit more on Monday. The idea would be to get out on Thursday, once the world has had a chance to react, because the world doesn't really have a chance to react until Thursday. Obviously they do, because algorithms and everything's global now, but really in a more sort of thoughtful manner. And I don't think it's going to be a market clearing event. I don't think this is a one and done. I think it's going to take us weeks, if not months, if not quarters, to really work all this through, right? At least. But it is possible we get a big move in one direction or another. I have no clue which direction, and I don't care, right? Right after the news tomorrow and then into Thursday morning. So for me, I'm looking to get out of this trade again by Thursday morning, because that's all it is. It's just a trade. And then we can start building other stuff around it. And so that's what we'll do that in the trade op. So again, make sure if you want to join us later on today, if you don't worry about it. But if you do want to join us later on today, thesteadytrader.com/Trump. It's just the link that we have. So don't get politically triggered on this. It's just, what it is. And then if you want the live text alert, which you probably need because an email may be delayed, right? You go to thesteadytrader.com/SMS. So that's what it is. So I'm going to see you guys over in the trade ops rooms in about 5 minutes. And again, if there's news, like I already mentioned this yesterday, some guys already got out of the trade for like a 10% gain yesterday. I mentioned in the trade ops chats yesterday. So we'll see you guys later on today. Trade ops members, I'll see you in about 3 minutes or so. Have a great day. Hope it was helpful. Please subscribe to the channel. Please give it a thumbs up, like, and we'll see you guys later on today. Thanks for being here. Take care.